welcome back to Morning Trade Live. It's time to go inside out on the healthcare sector. Joining me right now, Spencer Hakimian is here, Chief Investment Officer at Toulouse Capital Management. Thank you so much for being here. I do want to talk specifically about Walgreens, which is up 1.5%. But we cannot deny that names like Humana, CVS, UnitedHealth are leading the S&P 500. Humana up 13%, CVS up 9%, UnitedHealth 8%. When you think about the group overall, do you like the group? And look at these turnarounds.
So there's two parts to this question, if you ask me. One is that the Trump administration agreed to substantially raise Medicare spending rates for next year. That is obviously a very bullish thing for names such as Humana, other names that you had mentioned, because these are Medicare insurers at the end of the day. And then there's the second part, which is possibly even more interesting in the sense that healthcare companies are very insulated from any of this tariff stuff. This is a domestic industry. Supply chains really are not so extensive for something like an insurer. It's more of an insurance business, obviously. So I think this can be an interesting safe haven in the equity market as long as this tariff uncertainty is around.
Okay, so now let's take a look at Walgreens Boots Alliance. They had a turnaround, they beat the numbers. They have the acquisition from Sycamore for Walgreens Boots Alliance. That seems to be, I guess, going. Mm-hmm. So tell me some of your thoughts as this topped estimates and has been cutting some costs too, right?
Yeah, so there's this, planned merger that's supposed to go ahead. They confirmed it once again. They cannot give guidance for the entire year due to this merger. Ultimately, though, in a story like this, there, in my opinion, is not all that much upside left, given the fact that there's a merger announced with a strike price, and if that merger were to fall through, you could lose 20% in a day, whereas if the merger goes through, you might make another few percent from here. Even on an earnings beat like today, and with the market up, let's say 4% right now, this stock was only able to go up 1%. So I think you're kind of seeing that asymmetric risk reward actually to the downside because a merger has been announced already.
And look, it hasn't really done much since mid-March.
There you have it.
I mean, I see it at $10, $11, $10, it's doing a lot of nothing. I guess everybody's in this wait and see. So you would neither buy nor sell here, I guess?
No, I would not be so compelled here, especially because if this deal were to fall through, at the end of the day, Walgreens is not one of the best companies in the country. If this deal were to fall through, this stock can jump back down to 6 in a hurry. It's happened many times before. So I would sidestep something like this.
Right. And then what about Amazon, Walmart? Those have pharmacies as well, right?
Yeah, so those are different businesses. The pharmacies for Amazon and Walmart are a pretty small percentage of their overall businesses, but nonetheless they are still trying to run some type of pharmacy benefit manager model within those companies. Ultimately, we have to really see those industries mature. Pharmaceutical pharmacies is a very mature industry. It's tough to break in, very low profit margins, high barriers to entry. So I guess we're going to have to wait and see how those companies expand over time.
Right, understood. I mean, for example, in New York City, everything's locked up since COVID. And now if you're a New Yorker, you may be ordering from Amazon, like me. I mean, I can't get Tide and Zyrtec and some shampoo. I have to wait an hour, It's just not conducive to a New York lifestyle.
My wife always jokes that the longest part of her day is going to get shampoo from CVS.
Yeah.
Because you got to wait and,
Right, it's a thing.
Yeah,
and that's problematic
so
for a name like Walgreens when
absolutely.
They face a lot of issues, a lot of theft, etc. We'll see if they can bounce back on some of those kinds of things. That being said, let's go back to the Medicare story where Trump is putting more focus there. Do you have certain names that you like or recommend that would be buys maybe in this group? I mean, they are jumping today, but are there names that you sort of rely on in a portfolio?
Not that we own any individual names, but within Medicare, you want to be a lot closer to names like Humana and maybe like mostly Humana, to be honest, because they have such a high exposure to Medicare and Medicaid revenue. They are, in a way, they're a leveraged government bond play, if you think about it, because so much of their revenue comes from the U.S. government.
Right.
And, these things can get approved and prices for Medicare rarely go down.
Yeah, I see. As I mentioned, Humana is doing well, CVS Health, UnitedHealth. Some of these names really doing well today as we continue to follow the health story. Thank you so much. It's great to see you, Spencer. Thanks for being here. Spencer Hakimian of Toulouse Capital Management. Let's bring in Tom White, host of Fast Market. He has some example trades for us. You're looking at CVS, which is one of the best performers on the S&P 500 today after we heard at least some good news from Walgreens in its quarterly report. Some of your thoughts here on CVS.
Yeah, I think it was twofold, and also in a benefit last night when they actually raised the estimates to over 5% as far as the Medicaid services that they're giving, the drug programs, proposed increase of 5.06%. So that's also giving a lift to CVS shares, and the stock's up now, over 40% so far this year. So it's had a nice rebound. You see that here on the chart. So I looked at a strategy that a kind of a paid to wait type strategy, taking advantage of this higher implied volatility. If you do want to own the shares, it pays a nice big 3.8% dividend yield. So you got to take that into consideration when looking at a lot of these names. So I looked at a covered call strategy that's neutral to bullish, paid to wait type strategy where for every 100 shares of stock that you buy, you're going to sell an out of the money call against that long stock to create yield, along with creating yield by owning the shares and collecting that dividend. So I looked at selling the May 2nd weekly options that expires in about 3 weeks. The 75 strike call, so out of the money by about $5 to the upside. You're going to pay a debit roughly about $68 on that. So you're going to buy the shares at a discount to where the stock's currently trading because you're selling that upside May 2nd weekly 75 strike call. Your break even is the debit that you pay. Now, you've got a lot of risk because you're owning the shares, right? You've got that risk down to zero on this type of strategy. But then as you get closer to expiration during that May 2nd weekly cycle, you can adjust or roll that short option to another weekly option, to a monthly option. That allows you to collect credits, reducing risk, increasing potential profitability. So that's what I mean by a paid to wait type strategy. Well, if you want to own the shares, we'll start selling some upside calls against it to offset some of the downside risk on it. And that allows you to stay in the position, collecting that dividend, and then continuing to create yield by selling upside calls against your long stock.
Yeah, really interesting, especially since the company, as you noted, has her financial meeting. They've talked about the results meeting or exceeding prior guidance. That's some good news there overall for CVS. Then we turn our attention over to UnitedHealth, also a winner on Wall Street this morning, a leader in the S&P and the Dow, of course, helping to bring the Dow up almost 1,300 points now as we speak. Some of your thoughts on UNH?
Well, I think the key with this one, it's getting a nice pop on the back of, the whole sector getting a lift here today, and they're in that mix along with CVS as far as that increase of over 5% as far as Medicaid payments. So they've got earnings next week on the 17th. So I looked at a strategy that takes advantage of the elevated volatility, IV percentile rank in UNH going into that report, about 83%. So we're in the top 1/5 of what we've seen implied volatility levels over the last 52 weeks. So want to take advantage of that. So I looked at a strategy that's neutral, where you can sell a short iron condor here, collect a lot of credit, and with the expectation that the stock's going to consolidate between two break evens that are pretty wide at this point because of that higher implied volatility. So I looked at going out to the April 17th monthly options. You're going to capture that earnings event that when they report on the 17th in that morning, where I'm going to sell that iron condor. That means I'm going to sell an out of the money put vertical. I'm going to sell the 510 or 515 put, buy the 510 put, so a short $5 wide put vertical that's out of the money. And then on the call side, I'm going to do the same thing. I'm going to sell the 610 call, buy the 615 call. So a short $5 wide call vertical that's far out of the money to the upside. So this creates this short iron condor. You're going to collect a credit of around $3 on it. So that's what you can make, $300 on this spread, with risk of about 200, and that's outside of 510 on the downside and above 615 on the upside. That's where your risk lies. You don't want one of those big 2 or 3 standard deviation moves post earnings. Now, because you're collecting a $3 credit, your break evens on this one about 512 on the downside and about 613 on the upside. So you can see here, you've got a nice wide range for this stock to trade in over the next 9 days where you can be profitable on it. But you know, it might stay, volatility might stay elevated going into that report. So when you're doing a strategy like this, maybe you want to do it as close to earnings as you can because the stock can move exponentially ahead of that earnings report. But pretty good risk reward scenario on a neutral type strategy, taking advantage of that high IV in UNH.
And an incredible performer, right? Year to date, it's up 12%. Yeah. Mm-hmm. You have the president focusing on Medicare and more payments for these Medicare companies that, you know, increasing payments for them, likely, I guess. So good news there for UNH. Thank you so much, Tom White. Thanks. Looking at both CVS and UNH, both winners today, and having some example trades for us this morning.